Okay, good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's had a fantastic afternoon. Hopefully your Monday's been going well. And hopefully you guys enjoyed your weekend. I'm excited to share this with you guys today. We got a lot of fun stuff to talk about. Obviously, this is basic training. So if you came for basic training today, you're in the right place. And today, our topic of the day is going to be on the scanner and how the scanner works, how it came about, how to use it correctly, the application of the scanner. So I just wanted to make a video that really covers the basics of the scanner and how it works. Um, and I wanted to give you guys an opportunity to ask any really basic questions that you have on the scanner. And then I also would like your input. So if you guys have things that you would like included or added to the scanner, or if there's something that you'd like me to change, that's definitely something I can consider and look at changing in the future. But before we get started into the scanner and the basics of the scanner, let me make sure I go over our disclaimer. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's jump into this. The scanner is pretty new for a lot of us, right? Obviously, we launched this about 2 weeks ago, 2.5 weeks ago. We launched the scanner, and it's super awesome. I love the scanner. It's a very helpful tool. And let's talk about why it's a helpful tool. But before we jump into the why, let's talk about what it is, how you can find it. So most of you here have access to the scanner. I do recognize, the scanner is a separate service, in the program. And so not everybody has access to it. If you want to check to see if you have access to it, all you have to do is just go to the website, tradingwithsteve.com. Just click on the scanner. If it prompts you to log in, log in. If you don't have a login, then you wouldn't be a member and you wouldn't be able to see this. But yeah, if you do, if you're able to click on the scanner from, like, if you're on the home page of tradingwithsteve.com and then you click on Steve scanner and it pulls up, then you have access to it and your membership level is high enough to have that access. You can also hover over the members section right here. Again, you can also access Steve scanner through here. And you can also see the other member benefits as well. So if you want to, check out the signals page, you can go there. That'll take you to Telegram, where we post the premium signals. You got the basic training videos. You can go there to read about basic training. Scanner, you got all the different calendar classes. And then if you're in the VIP or Pro program, you've got access to book one-on-one calls with me, which you can do there. So like I said, and also if you're watching this on YouTube and you would like access to the scanner at any point, there is going to be a link down below where you can click on that link and start a 14-day free trial to use the scanner. And you'll have access to some other basic videos that I'm actually putting together, just finishing up this afternoon, that will go at the bottom of this. So you have the scanner here, and then just below the scanner, there's going to be some explanatory notes that I'm finishing up. Should be done this afternoon. And you'll also have a couple of videos here that will kind of explain how to use the scanner as well. This video is just going to be a little bit longer, a little more in depth. We're going to answer a lot of basic questions. And like I said, we're going to give you some best practices on how you can use the scanner going forward. So first of all, let's talk about what it is. So a lot of people have different scanners out there. They're a little bit more rare because they take more time. They take data to be able to create such a scanner like this. Um, so I know of a few places that have some Forex scanners. I know of a couple of different companies, and I've actually purchased several scanners before, and a lot of them have been good. Some of them are not that good. I really love ours. I personally believe ours is the best, and I'll explain why ours is the best out there. I am biased obviously because I made this, but I also made it to the type of, it is generally kind of made towards the style of trading that I subscribe to. And so it is in some ways a tool that's really designed somewhat for me, but it's also for the traders who are like me. If you like to trade the more, 24 hours, 72 hour, to a week long trade style, if your style is intraday to swing trade, which is like how I like to trade, then this scanner is really, really good. Can you use the scanner to find trades during the day? Absolutely. That's definitely something you can do. But is it going to give you an edge day to day that's just lightning like? Probably not. I think it's more on a weekly scale. So far, that's been where our bread and butter is with this scanner. It's very lethal in picking the direction of the market for the week. We've seen that many times now, like last week and the week before. Each week, the best trades from the scanner have been fantastic. You pick the top 2 or 3 or 4 or 5, 6 trades from the scanner, and you're going to do pretty dang well. And again, it's not always going to be the case, but so far that's been what we've discovered with it. So let's kind of break this down. So the scanner itself, it has got currently all 28 major currency pairs. We are going to be adding pretty soon here. I'm just trying to finalize a couple of different places to get some data on NAS 100, US 30, oil, and gold and silver. Once I get those finalized, it shouldn't be too hard to add that data into the scanner. And at that point, you'll have some other instruments here to look at. But right now, you've got all 28 major currency pairs, and that will be listed over here on the left side. Okay, so you can actually categorize or filter the actual pairs by in alphabetical order here. The next column is really important. So this is our COT signal. Okay, so this is based off of the COT shift data, specifically from the commercial side of the market. So we could talk for hours and hours about why we trade commercial data and the back testing behind commercial data. We don't have that kind of time, but I do want to just basically touch on why we use COT data and commercial data. So for those of you that are watching this for the first time, what is COT data? So COT data stands for Commitment of Traders, and it comes from the CFTC. Uh, it stands for Commodities Futures Trading Commission, and it's a financial regulatory authority here in the United States, and they monitor the commodities and futures market. And one of the things that they do each week is they release what's called the COT report every Friday at 4 p.m. Eastern. And it is a basket of information that tells us what the banks are buying and what they're selling, at least the banks that are registered with the CFTC. And when they release that data, we're able to take it and decide whether or not we want to buy or sell. So when the banks in general make a shift and they start moving one direction, we want to follow the direction that they're moving to. And usually this is really good for a week to week, especially when you look at the commercial shift. And if you want to come to the COT report webinar, I can explain why the shift on commercial is really, really good for picking the direction of the week. If you're trying to pick like an overall long-term direction, non-commercial might be the one you want to follow, or like leverage funds. Leverage funds is a great one to follow. Like non-commercial or leverage funds, COT data is great from like a more longer term perspective. But if you're looking for more of a week to week signal, the shift of commercial seems to be really, really, really good. And there's a lot of studies that back this up, both that we have our own studies that we can look up. And I've also got a lot of different resources that I've looked up on YouTube and online of people who have also done their own back and forward testing of commercial data, specifically looking at the shift. And so based off of what we've been able to come up with, both from secondary sources and from our own sources, it seems like following the shift each week is a really strong signal. So that's why we've included the commercial shift as far as COT data goes. So it's a very powerful signal when you can follow that week-to-week COT data. So that's why I've got, this kind of towards the left over here, because it is generally a little bit more important to look at. And I would regard the COT data as a little bit more powerful than, say, like sentiment, although sentiment is also very, very important, which is also why we have it on here. So that brings us to this. So that's this column right here. So in this column, let's talk about this just real quickly. In this column, you're going to have a series of signals each week. This will update once a week. So the signals right here that you see, if you come in here on Sunday, Monday, Tuesday, you're not going to see these change from Monday to Tuesday. You're not going to see them even change from Monday to Thursday. They're not going to, these are going to be the same signals throughout the entire week. Okay. Um, why is that? Well, it's because we get caught data only once a week, every Friday. If I got it more often, or if anybody could get it more often, then we would update this more frequently, but we only get it once a week. So sometime late Saturday, between Saturday and Sunday is when you'll see these signals change. So like if you go to bed Saturday night, they may not be changed yet. Maybe they have. It's just kind of when I can go in there and make those updates. This is the, oh, by the way, this is the only piece of data that I have to manually go get. Now I do have it somewhat automated. I could tell you, I don't know if that's important to tell you how I've done that, but the information is very accurate. So don't worry about these not being accurate. The way I've got it set up, there's basically no room for human error. So these are always going to be accurate. The way I've got it set up, it's very unlikely that this would be incorrect. I also go in and double and triple check this scanner. This is very important to me that this is accurate. Plus, like I said, this is very hard to be inaccurate. So this is always going to be accurate data. And it will update once a week between Saturday and Sunday. Okay. And so during the week, it'll be the same signal. This week, we actually don't have a lot of signals as far as caught data goes. We haven't had a lot of shifts this week. Last week and the week before, we had some incredible shifts, especially 2 weeks ago. The shifts were like we had 10 signals that were strong buys and 10 signals that were strong sells, and the rest were just either sells or buys, and like maybe one or two neutral trades. Like everything was pretty much a signal. This week we have to be a lot more selective, and we have to be a little bit more nimble about which trades we pick because there aren't as many options this week. But nonetheless, it doesn't matter too much because there's still trades to be taken this week. Every week there's going to be opportunity. And this week is no different. We're definitely got opportunity despite having a few less signals. But it's too bad I don't have any strong buys or strong sells here on the COT data. I only have either buys, sells, or neutrals. But in the event that we had a very large shift, then you would get either a strong buy or a strong sell. But right now, these are just classified as either sell, buy, or neutral this week. This is the shift. So this is very much, you'll notice here, if I categorize the shift, the COT shift, you can see the biggest shifts versus the smallest shifts. So right here, you've got at the very top, the biggest shift this week was the Aussie dollar. So it had a 3.25% positive shift. What that is basically saying is that the banks this week increased their overall position on the Aussie dollar by 3.25%. That's what that's saying. So they're buying more Aussie dollar against the US dollar to the tune of 3.25% in a week, which is a good shift. Like I said, a bigger shift, a shift that would really matter to me. So just so you can kind of get an idea, a shift that's over, we'll say like 7 or 8%, whether it be negative or positive, now you're talking. Like that's a really significant signal when you get over 7 or 8%. We actually had some shifts 2 weeks ago on, I remember it was like the NZD franc. It was a 23% negative shift 2 weeks ago on the NZD franc. And that guy, if you guys recall that trade, if we skip away from here for just a second, that NZD franc had a humongous move to the downside over the last couple of weeks, and part of it was because the shift was so negative. So it was this week right here. We got a signal to sell the NZD franc to the tune of the shift was minus 23% right there. That's when we got the signal to sell, and it didn't go down right away, but by the end of the week, this thing just fell apart by the end of the week. So it was a massive shift, and obviously it did very, very, very well by the end of the week. So that's from That is from, and again, so that's what you're looking for is the biggest shifts. So we don't have huge shifts this week, but they are, still there and they're still worth looking at. Okay. So for example, this week, the pound Aussie has the biggest shift. It's classified as a sell and it's a minus 3.87. So naturally, that's almost a 4% change in position. So I'm looking for sell opportunities on the pound Aussie. Does that mean the pound Aussie is going to go down right this very second? No. In fact, it can go up. It can go against you. But and it actually it doesn't even have to work at all. Nothing's guaranteed. But what I am saying is that when you are looking at the shift here, generally you want to find the currency pairs with the biggest shift. Okay. So this is probably if I have to categorize signals, I often do it by the shift. So you can filter every single column in the scanner. If there's any column that I really care about, it's honestly the shift. Okay. Now I do filter all day, every day, pretty much all the other columns just to see what's available. And we'll get to those in just a moment. But I would say the shift is perhaps the most important thing when you're trying to find weekly trades. So let me just up to this point, without looking at any other component in the scanner, uh, if I were to just look for a trade just based off of this, let me give you an idea. So, like for example, with this pound Aussie, it's got a negative shift, meaning I'm looking for sells. Forget sentiment, forget everything else for just a moment. I'm looking for sells just based off of this. So, what I would do is I would pull up the pound Aussie this week and I would look for places to sell. So, I'd look for I'd use my price action skills and I would try to find, if this is a supply zone, I'd look for a supply area to sell. If let's say there's a supply zone up here somewhere, maybe we'll sell up there if we can find an opportunity. So that's kind of, oh, it looks like there is actually one like right up here anyway. But that's kind of how I would generally use the scanner is to look for selling opportunities just based off of just the shift alone, right? Is how can I find places to sell? So I'm not looking for buys because it was indeed a negative shift. I am, in fact, looking for sell opportunities. Okay. And the better the shift, the more positive or the more negative, the better. Okay. So, like, let me kind of go through the middle here. So you'll notice down here, look at some of these shifts like the NZD JPY. It had a minus 0.07 shift. That's nothing. That literally means nothing. Okay. So naturally it's a neutral signal. Means there's no bias, there's no direction. The banks really didn't even touch their trade that week on the NZD JPY. So on something like that, I don't really have a bias. Yeah, I don't really have a bias or a direction I'm thinking of going with that pair, or even some of these other ones. Like, here's the franc yen kind of neutral this week, Aussie franc neutral, euro pound neutral. All these other ones are neutral. So, and this is kind of different. We don't usually have this many neutrals, but this is one of those weeks where there are a lot. Um, and so you just kind of stay away from those ones as far as the shift goes. Okay. All right, so you want the most negative or the most positive is what you want to focus on. Right now, there's actually only one long position this week that's even worth considering, which is the Aussie dollar long. And I think we took that one, and that one is doing okay right now. And then these other ones, I'm actually down on a couple of these to start the week. But generally, like I said, that's what we're looking for. Okay, that brings us to our next column. So the next one is the sentiment index. Okay. So you can filter this one as well just by clicking back and forth. And you can see here you'll have a series of different signals, right? So right up here at the top, I've got these strong cells, right? Strong sell, strong sell. And then down here you start to get to some strong buys, strong buy, strong buy. And then down here you've got some sells, and then I've got a bunch of buys down here. So again, if it says strong buy or strong sell, that is generally going to be a little bit of a better signal. And it is very much general. You don't want to just take a trade just because something says strong buy or strong sell. Ideally, if you can take something that says strong buy or strong sell, and you've got something else like a caught signal that agrees with that direction, then that should in general be a better trade to take. But it's not always going to be the case. So just be aware of that when you're looking at different signals to take for the week. Okay. So sentiment, basically, for those of you that are new to sentiment trading, we actually do have a specific webinar where we go into the details and science behind sentiment. So, and we even have a specific overnight strategy that I can teach you. We have some recordings on that sentiment strategy that you can go back and watch on the calendar if you're interested in learning how to trade the sentiment strategy. Okay. But basically, for those that are new, sentiment, why do we include sentiment on the scanner? And what does it do for you? So the sentiment index is a it's a tool or a metric that measures how far or how many traders are buying a specific currency or how many traders are selling a currency. Or it could be, not just a currency, it could be um, like it could be US 30, NAS 100, gold, oil, silver, those kinds of things. It could be any instrument. It could even be stocks, right? So sentiment can measure a variety of different things. But specifically, we're trying to find out, since we do a lot of currency trading, we're trying to find out which currencies are the most bought up and which ones are the most sold off. So in general, retail traders are what supply us with sentiment data because sentiment is based off of the crowd. Okay, so if the crowd goes long, then we want to know that. We want to know if the crowd is buying. If the crowd is selling, we want to know if the crowd is selling. Now, why is this important? Because usually the crowd is actually generally wrong about the markets. Now, they're not always wrong, but in general, they're usually not very good at trading. Um, and so because in general they're not good, also in general, we want to go against them, right? So if retail traders, you can categorize this. Let's actually categorize this here. Let's filter this here. So if I click on this, long, percent long right here, it's going to line up all these bars here from the biggest bars down to the smallest bars. And basically this is a representation of how many traders are buying the market. So for example, right here, you can see the CAD franc has quite a bit of buying pressure. So you've got 93% of retail traders who are indeed buying right now. And then you've got only 7% of retail traders selling the CAD franc. Why is that? Why are retail traders doing that? Well, it's because retail traders like to trade against the overall market because traders want to buy low, sell high. So when they see the market going down, they want to pile into buys. And if the markets are going up, they want to pile into sells. Why? Because we want to buy low, sell high. We want to be right about the market. So we buy low, sell high. Now, isn't that a good, like, if you're new to trading and this is kind of like your first video about trading or something like that, or one of your first videos, you might be like, well, why is buying low, selling high bad? It's not. Buying low, selling high is great. The problem is that the information that we go off of to buy low, sell high is usually working against us. So for example, when a trader just determines whether or not to buy low, sell high, they're often looking at the charts. They'll look at the candlesticks and if they see a market going up, visually they think the market is high. So they think it's time to sell. And that's the information that they use to determine whether or not they're going to buy or sell. So they go ahead and jump into a sell because they think the market's overinflated, when in reality, a lot of the times it's just beginning its new uptrend, right? It's the same thing in the other direction. If the market's going down, a lot of traders like to buy because they think it's a bargain. All they see is on the charts is candlesticks progressively going lower and lower. And so retail traders think, oh, that's a bargain because I can see it on the chart. It certainly looks like the market's going down. So I'm just going to go ahead and jump into buy positions. That's the mind of a retail trader, is they want to buy low, sell high. And so they get into these buys way too early, or they get into sells way too early. That's very helpful to you and me because we can take that information by how much they're long or buying, or how much they're short or selling. And then we can use that basically to, in a sense, trade against them. It's nothing sinister. It's nothing wrong. That's just business. You're just trying to create an edge for yourself. Um, It's not like you're, going to your neighbor and calling him up and saying, "Hey, are you buying or selling?" If he's selling, you're going to buy. It's not like that. It's not like you're trying to hurt your friend or anything like that. Like I want to make sure that's very clear. Like because I talk about it kind of nonchalantly, like, "Oh, let's just trade against people." No, no. This is just the markets, right? It's the same thing why we want to trade with the banks because the banks are usually doing pretty good, right? So we gather the COT data and find out which direction they're going because we want to trade with them. All right. And if in general, as a collective group, retail traders are not very good, then we'd like to know where they're positioned too so that we can make an informative decision on whether we want to trade with them. And by the way, sometimes retail traders get it right and they'll get it right for a short period of time. Like for example, I took a short last night on the Euro franc. It was an overnight trade, and also because of the COT signal, and I ended up losing on my trade. So it's not like it's going to work 100% of the time. But overall, if you trade against the retail trader and trade with the bank, in general, you're going to be right most of the time. But trading is nothing's 100%. This is just to help you make a more informed decision as to which direction you want to go. So okay, so that brings you to these columns right here. So you can categorize both the long side, the short side. You can kind of give an idea of which direction the market's going, or what direction it's leaning towards. Okay, and so up to this point, again, so we've established all these first several columns here. Okay, and we know what pairs we're looking at. When I'm looking for trades, if I have to kind of pick a trade of the week where I feel really, really good, again, what I like to do is I like to categorize this by the shift. Okay. And I like to find the most positive or the most negative shift. And I want the COT signal to align with the sentiment signal. If they don't align, then I kind of take it a little bit easier. I'm not as aggressive to enter. However, if I do see, like, for example, this pound franc right here, this is a good example where you've got a sell, the COT signal says to sell. It can either say strong sell or sell, either's fine. And the sentiment either needs to say sell or strong sell. If both of them are in the same direction, then I get pretty excited about that trade as an overall direction for the week. Um, Again, is it 100%? No, but I have a pretty good hunch that by the end of this week, the pound franc will probably end up lower. Um, and the euro franc is also a good example. It's got a good shift, or at least a decent shift to it, to the downside. So that's a sell. And the sentiment index is indicating a strong sell. So both of those are in the same direction. um, both of these would be in general good trades to take for the week. Was it a good trade today? No, it was not a good trade today, but is it a good trade for the week? I believe so. So that's kind of how I view and use the sentiment index. Okay. Last week, if you guys recall, what were the top trades last week? When you did this same exercise with me, it would have shown you the NZD CAD, and it would have shown you actually the NZD CAD was the number one trade to take according to this. It had a either a sell or a strong sell on the COT signal. The shift was almost 9 or 10% negative, and the sentiment index was also indicating a strong sell. And that was on the NZD CAD and NZD franc. Both of those were doing the same thing. And how did those turn out last week? Well, let's go take a look. So last week you had, um, let's pull these up. So here's the NZD franc from the start of the week last week to the end of the week. This thing fell over 130 to 140 pips. If you pull up the NZD CAD last week, same exact thing. So this thing went from here to here by the end of the week. That was 86 pips. So but during the week, didn't look at this. There were several times where this came up. See, it came up right there, came up right here, right? Came up right here. So during the week, you had moves to the upside. And those can be confusing if the scanner is telling you to sell, right? And you see those periods where the market goes up. So this is definitely not one of those things where it's like a magic bullet where you just go ahead and sell and immediately the market goes down, or you go ahead and buy and immediately the market goes up. I don't know of any scanner that could do such a thing, where it's like a consistent, like never fails, always works type of thing. This is just to help you give a much more informed decision about which direction you ought to be looking towards for the week. And if you can get both of those to align, there's a pretty good chance that overall, if you smooth out from the start of the week to the end of the week, that yes, this overall, like for example, in this one, overall, the market did indeed go down by the end of the week. It just, had detours along the way, like most stocks, like most crypto, like most Forex, everything will trade that way. It's not going to be one straight line to your target. Um, so that's the general direction you should be aiming towards, and this is supposed to aid you in that process. So we don't have, at the moment, we don't have a lot of signals because of there is some conflict between the sentiment and the COT signals this week, more so than I would say usual. But there still are some opportunities here, which is great. The fact that we still do have some good trades to take is a good thing. Um, it also could change, like the sentiment data. By the way, I forgot to tell you this part. So COT data updates once a week, usually between Friday and Saturday night. And it'll update by Sunday. You'll have new signals, and going into the week, you'll have new signals, and those will not change until we get new COT data on the weekend. So just so you know, COT data will not be changing until the weekend. That will always be the same. Sentiment data changes live. So I don't even have to do anything. The sentiment data will update whether I'm here or not. It will update. Now, you won't see the signals change a ton from an hour to hour standpoint. You may not even see it change a ton from a day to day standpoint, unless there's a big move in the market. If there's a big fat move that happens in the market, across most pairs, then yeah, you're going to see the sentiment definitely change, and that will give you new signals immediately. And then you can decide, hey, if those new signals align, like it's very possible. Let me give you an example here. It's very possible, like with the pound Aussie, because we're pretty close to 50-50 here, or I guess we're getting closer to 50-50 from the sentiment index. It's very possible that this pound Aussie switches from a buy rating from sentiment to sell. We could definitely start to see that switch to a sell. And if that switches to a sell and the COT signals this to sell, now I'm getting a lot more excited about shorting the pound Aussie, because you have an alignment between the two signals, which would be a really good thing. Okay. So that updates live. Now, this is pretty cool, the breakout indicator. I'm pretty proud of this. And I've put a lot of work into this breakout indicator. And so let's move our attention over here. I actually made a quick update to it yesterday, so it's even more powerful than it was before. Basically, what the breakout potential indicator does here is it's a 1 out of 10 star rating, and it basically says 1 out of 10 stars, how likely is the currency pair going to break out? And it could be up or down. So it's not necessarily telling you a direction as to which way the market's going to go, but it's a indication to tell you, yep, this currency pair is very much due for a big breakout soon. So don't try to do anything fancy in consolidation, because that consolidation will likely break soon, which can be very useful. I'll tell you what, there's actually a lot of strategies that require volatility, and so if you're trading a strategy that needs volatility, uh, this is great, because it's kind of finding the most likely currency pairs that are going to have a big breakout soon. Basically, what it does is it takes the 5-day percent change in the market, and this is the update I made. It takes the 1 month movement in the market, and it basically gives it a score for each one. It says like, okay, in the last 5 days, the market's moved this much, or it's moved this much, and or it's moved this much in the last month. And if both of those scores are pretty high, what that means is there's not been a lot of movement on either the 5-day or the last month. And then, if those scores are high, you're going to get more stars. Um, when do you get fewer stars? You get fewer stars if a market's already had a big breakout in the last 5 days and in the last month, or a combination. If you get kind of a combination of the two, like maybe your last 5 days, there's been a lot of movement, but in the last month, there hasn't been a lot, you're going to get something more like this, where you get like 5 or 6, maybe 7 stars or 4 stars, something like that, 5 stars. And it's not as likely to have as big of a breakout due because it's already been having those big breakouts. But when you look at this, as of right now, there's only one currency pair with 10 stars, and that is the pound dollar. So, like, if I were to look at the pound dollar right now, let's actually pull that up. Let's go to the pound dollar. Um, oh, there it is. It had a huge breakout last night, actually. So that's kind of cool. Um, that may continue though. Um, had a big breakout last night right here. About due. It was about due. And but yeah, you can actually see from where the start of the month is, which let's see, a month ago, let's see if today's the 23rd. This is where the market was a month ago. It was about right here. That's about where the market is right now. So the pound dollar really hasn't done much in about a month. And like I said, it also takes the average of the last 5 days, or not the average, but the change in the last 5 days, and also gives it a subsequent score. So you want to make sure that you're looking at it not just from the last week, but you're looking at it from a larger term perspective as well. And it will give you currency pairs that, like I said, are likely to have some big breakouts pretty soon. And this is kind of cool actually to see the pound dollar just break like it did last night, because it was definitely due and it came in clutch. And it probably will continue to do some crazy things. Maybe we see this pound dollar continue to the upside. Um, 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 so anyway, pretty cool. So that's kind of neat, this indicator, the breakout potential. And some of these other ones are due too, like the pound yen's gonna have one likely soon, the Aussie yen. We are Monday going into Tuesday, Wednesday, Thursday. Usually Tuesday, Wednesday, Thursday are the biggest days in the markets, right? Like Tuesday, Wednesday, and Thursday, you get really big moves. And so I would probably suspect that a lot of these currency pairs that are due for a breakout will probably experience a big breakout, just because, um, they're high up on this list. So, okay, cool. We might update this breakout potential indicator, may fine tune it a little bit more. Like I said yesterday, I fine tuned it even better. So this is even more powerful. I want this indicator to actually be very powerful in the future as we um, look for trades. So I really want to fine tune this and make this as good as possible. Right now, it's already pretty awesome and it's been pretty good. I have some ideas on how to fine tune it with like volume and stuff like that. So I have a piece of data that I'm going to use volume as well to give it a score, which will then give us a um, yeah, it'll be pretty nice. Anyway, that's all I'm saying. So it'll be pretty awesome. And that'll help you find better breakout opportunities throughout the day. So that could even give you more scalping opportunities for somebody who's more of a scalper. Let me answer this question here, or let me read this. Wes says, is this correct? The numbers listed in the COT shift is a percentage of the combination of the pair. Example, pound has an increase of 5%, and the Aussie has a decrease of 2%. Yep, and then the pound Aussie shift will be a plus 7%. I doubt that is correct. Please explain how you came up with those numbers. Yeah, okay, yeah, no, you got it. I think you got it. So yeah, basically, like if I go back to the COT shift for just a moment here, like if you this number, this shift is based, yeah, that is basically what you said. So the pound this week, if I recall, I'd have to go take a look at it, had a decrease in like the pound itself. If you isolate just the pound entity, nothing else, no Aussie, no euro, just the British pound, had a negative shift. So I know the pound has gone up today, but overall, that's what the banks appear to be doing, is they're looking to um, send the pound lower this week overall. And so the pound had a negative shift, and then the Aussie had a positive shift. So if the Aussie has a positive shift and the pound had a negative shift, then this is a combination of that. Exactly. So you should have a negative, like if that'll make the negative even more. Like if you think about it, if you have the base currency, which is looking lower, and the Aussie, which is looking to go to the upside, the differential between the two is what creates that shift right there. It's the negative 3.87, which I believe is what you're asking. Yep. So, yep, you got it right. That's exactly right. Yep. So that would be the pound Aussie would be, yeah, out of, and if you look at this, that is the number one shift trade this week. It's not necessarily the best signal, but as far as shift goes, that is the best shift. So now, I mean, I do have an interest to sell the pound Aussie right now. That is what I'm looking for the pound Aussie to go down this week. Overall, again, I don't know if it's going to happen. Um, I don't know if it's going to happen today, or tomorrow, or even if it will happen, but that is generally the direction I'm looking for, is a move to the south side eventually with the pound Aussie. All right. So anyway, like I said, back to the breakout indicator. I think we've pretty well wrapped this one up. Does any other questions on the breakout indicator? Like I said, I have one more piece of data that I'd like to add into the breakout indicators so it kind of builds a score from multiple standpoints. And right now it looks at it from two different standpoints. It used to only look at one piece of data. Now it looks at two. And now if I can add that third piece of data, I think that can really make that even more powerful. So, but I don't want to over optimize either. I think it's already pretty awesome. It's already working pretty well. So, like I said, anything with a lot of stars, what that should tell you is that these currency pairs are likely to have a big move coming soon, most likely in the direction of either the COT and or sentiment signal. So but that's not always the case. So if you want to find like a short-term trade, let me give you an example of a short-term opportunity. So like, okay, so right here, the Euro franc has a sell as far as COT data goes, and sentiment has a strong sell, so that's good. And it's got 8 out of 10 stars. That is pretty good. I would love to see it around 9 or 10, but 8 is still good. It's actually a little bit better than the pound franc, which is 7 out of 10 stars. To me, this says, okay, maybe the euro franc's more due for a big move to the downside and not as much like the pound franc, but they're both up there. Um, yeah, they're both up there. Okay, cool. All right. Some other things you'll notice the 5-day change. So you can categorize this or filter this by the change in like how far the market's gone in the last 5 days. So right here, you can see the Euro Kiwi has gone up 1.84% in the last 5 days. So that's a pretty big move that it's made. In Forex, that may not seem like a lot, maybe like the stock market or something, but in Forex, that is a pretty astronomical move to move. That basically means the euro is worth almost 2% more than the Kiwi was just 5 days ago. That's basically what that's saying. The next runner up is the Euro CAD. So the euro's gone up against the Canadian dollar, 1.46%. And it's actually been good because gas prices have come down just slightly. I don't know if you guys have noticed, but the scanner could have told you that, which is kind of cool because there's a peg between the Canadian dollar and oil, and the CAD has been suffering the last little bit, and that's been sending oil prices a little bit lower. So, kind of cool. Okay, what else? Okay, so you got that. Then you got the daily pip range. This is helpful, especially because we always talk about how currency pairs are not created equal. So some currency pairs have bigger average daily ranges than others. Um, like the pound Kiwi, for example, has 140 pip average daily range. Conversely, if you filter this the other way, the euro pound has an average daily range of almost 37 pips, right? So not every currency pair moves the same or has the same type of you know, it doesn't move as much as far as pips go. So this kind of helps you tailor your stop loss and your take profit to the correct amount for each pair. So often when I'm doing like an overnight trade, when I'm looking for opportunities, I don't want my stop loss to exceed about a half an average daily range on an overnight trade. Or if I'm going to do like a week-long trade, I don't usually like to have stop losses bigger than a full average daily range. And so this will help you kind of get an idea of how far the market actually moves in a day's time, because there's no use in having a 200 pip stop loss for a currency pair that only needed a 25 pip stop loss, right? Why would you have a 100 pip stop loss when 50 could have been just perfect, right? Just some considerations to make, and that's where the daily pip range is very helpful. Okay. So this is how I would use it, guys. As far as a weekly signal, I would say this is extremely accurate. When I like to come in here in the mornings and look for trades, I like to categorize this by the shift in positions, because the shift is really the piece of data that matters the most to me, because that's where the banks are moving. And then if I can get the overall COT signal from that shift to align, like for example with the pound franc, to align with sentiment, then I get really excited about that as a trade for the week, potentially for the day, but especially for the week. This is going to be a very solid signal. As the markets continue to move throughout the rest of the today and tomorrow, these sentiment signals are subject to change at any moment. The only ones that will be reliable, or not reliable, but rather that won't change, they'll be fixed signals throughout the week, is the COT signals. Those will not change until this weekend. Okay. All right. Any other questions on the scanner? While you guys are putting your questions in, if you have questions, just an FYI, at the end of the day, you should see here at the bottom of the scanner a couple of things. You'll have a video or two with an explanation of how the scanner works. You'll also have some explanatory notes behind each column and how each column should be used and what those different numbers and metrics mean, so that you can have a better idea of how to utilize the scanner. So you'll have some explanatory notes and a video. I think that should help a ton. And that will be here at the bottom. So just pay attention to that. I may even put something here at the top that's small. I'm just kind of thinking, maybe, I'm not totally sure yet though, what I'll do. Lee says, can you talk about when using the sentiment strategy, how we should factor in the breakout score? Specifically, I'm wondering about the CAD franc. It only has 4 stars, but a strong sell sentiment. That's a great question. No, as far as the overnight sentiment strategy goes, it doesn't really matter a ton about the breakout score. I would still trade the most shorted currency. Like, for example, with the CAD franc, it's actually very much bought. So I would sell it. CAD franc is the current signal to sell tonight unless that changes later. Right. And then you've got Aussie franc is also high up on this list. That's another good one. On the flip side, you got the USD yen 83% short. So signal would be to buy that one. That one actually has a pretty good breakout potential, but I wouldn't skip the CAD franc for the USD yen just because it has a better breakout. In fact, I probably wouldn't use the breakout potential metric for that strategy because it doesn't include that. We don't use that for that strategy, but that's a great question. So just because it has 4 stars here doesn't mean you shouldn't trade it the way we've set it up. But that's a great question. All right, guys. Well, have a fantastic rest of your day. Thank you for coming, and we'll see you guys in the next webinar.